Sir, we can start now.
Yes. Hello, everyone. Welcome to GSTZen learning series. And Utkarsh, is the session being recorded?
Yes, sir. It's already live stream.
All right. Good. Great. So, at the start of the session, welcome you all. And definitely special thanks to Utkarsh for ensuring that the learning session continues. Let's start with today's session. And today we are going to discuss on especially the closing of the books of accounts for the financial year 23-24. We are very soon coming to 24-25. And most of you would have experienced the different types of audits and notices from the department. So we'll also see what is that we need to be ready in terms of replying to these notices which are coming from the department. And also it's equally important that how we use technology to leverage and get the best use of the GST compliances so that we are on top of it. I'm sure when you have received the notices and you would have realized that having a compliances in time is much better. Long. And in GST, what matters is the self-assessment. You assessing yourself. Section 55(9) of the Act talks about assessment being the self. And you assessing yourself in a correct matter is the most important thing. In our earlier sessions, in fact, our recordings are available. You should definitely watch. In our earlier sessions, we have explained about how the notices are generated when there is a difference between GSTR 1 and 3B, when there is a difference between GSTR 2B and 3B. These things have clearly explained in our earlier sessions. So, very important that we make sure that the returns are up to date, in line with the books of accounts. In case if something goes wrong, you should how do you correct the things that have gone wrong? So we are going to discuss all these aspects in today's session. My name is Venugopal. I am a chartered accountant practicing, and I've been in this domain of practice since 22 years. And GSTZen is an ASP GSP, and GSTZen definitely helps you in terms of getting your compliances upright, making sure that you have all the data intact when you're filing your GST returns. So GSTZen, you have customers from listed entities to small tax practitioners, all using this software, right? What we are going to cover today is in another 2 months that you are finalizing, like I'm sure everyone filed your Jan return, in another 2 months that you are finalizing and closing your 23-24, what are the aspects that you have to check now? And in terms of the books of accounts, what are the entries that you have to post in the books of accounts? The same things, how GSTZen would be helping you in easing all these compliance matters would be handled by my colleague Bharti, who will be walking you through all that which I am discussing with you as a theory part. She would be walking us through practically how do we use it in Zen. And lastly, we are here to assist you in various GST compliances. Whatever the questions that you have, I would request put your questions in the chat. We will take up the questions as time comes and we will answer all the questions. Firstly, on the output side aspect, very important is when it comes to indirect taxes, you can never go wrong. The difference between direct taxes, which is income tax, versus indirect tax. Any computational error in the direct tax, it is going to impact a percentage of the profit. While any computational error in indirect tax, like GST, it is going to impact a percentage on the turnover. And sometimes these errors will be so costly, the net worth of the company may get eroded. Say, as simple as it, someone has estimated or someone has classified the product at the rate of 12%, and department is now assessing saying, hey, look, it's not 12%, it is 18%, please pay tax. 6% of the turnover, some of them might be doing a wholesale dealing and whose gross operating margin is between 4 to 6. It's like it's a huge loss. Or some of you have considered this certain goods or services as exempt, while department is now saying that please pay tax on it. Some of you have claimed a reimbursements which are done from your principal suppliers, customers as a pure agent, saying that this is not my revenue and you have not offered to this to tax because it's a transaction in money. Now department is asking you to pay the taxes. And this is coming up 6 years, 7 years later. I'm sure most of you would have received some notices or communication for the department for the period pertaining 17, 18, 18, 19, 19, 20 now, right? So way back then, the knowledge that you had and the way back now, the knowledge you have is different. Way back then, the tools and the technology that is available to use and now is different. That is where it's very important that you take care of this now. When I say GST output, the liability of the GST could be anywhere in your financial statements. When I say anywhere in the financial statements, what is the obvious thing which people look at is the P&L account, the credit side of the P&L account. That's the obvious thing people would look at it, right? You also look at the expense side, the credits. For example, you have provided as you are selling the goods and services, you would have claimed some reimbursement of travel expenditure. You have transported the goods using a GTA. The transportation charges you have collected from the customer and paid to the GTA, which is offset as a credit in your expenditure ledger. While for the purpose of GST, that is also liable to be taxed. You better look at it and pay it. It might be sitting a credit in the expenditure side. When you are selling an asset, fixed asset, the book value versus the sale value is treated as profit or loss for the purpose of the books of accounts. But for the purpose of GST, the entire sale proceeds to be offered for GST. You may say, I'm selling it as scrap, I'm selling used vehicle, it is my fixed asset, I'm not in the course of selling fixed assets, but still for the purpose of GST, 2 subsection 17 is very wide, and you are liable to be paying taxes on the events of sale of fixed assets also. Second thing, when you are looking at selling the fixed assets, 18 subsection 6 makes it mandatory that when you are making a sale of an asset, you need to ensure that the asset should be there with you at least for a period of 5 years. So the input tax credit, if any you have availed, you got to reverse the input tax credit that you have availed on the fixed asset by a treatment as an output tax liability. So when this fixed asset is sold, you got to be taking care of this also. Advances received from customers, this is a common area which we have noticed, which is lying in the liability side of the balance sheet. Many doesn't pay attention to, especially with regards to the services. Receipt of advances are taxable under GST. So you have to take care of this. Common error that's happening in the stock transfer, the goods moving from one GSTN to other GSTN owing to Schedule 1 is liable to be paying taxes. But what about services? This has been a very common question. After the 52nd Council meeting and the recent amendment in the Finance Bill 2024, the prominence has come for input service distributors. And here where the questions have come, the difference between cross charge versus an ISD. The Pandora box actually opened with an advance ruling which is originating from Karnataka on Columbia, Asia, where the ruling was sought that if there are any employees who are sitting in the head office and providing support service, admin services to other units in India, should there be a levy, where the advance ruling was saying yes. Now the question that came up, employee is an employee of an organization. Now, where does the role of the cross charge come in, especially in services? There is a circular 199 made an attempt that identifying what is cross charge, should you do, not do, both on internally generated costs vis-a-vis the cost that you have procured. Let's take a couple of examples when we talk about cross charge versus ISD. If I have two registration, one registration in the state of Karnataka, Bangalore, another registration in the state of Delhi. Let's say I have an office in Delhi, another office is in Bangalore. I have purchased Microsoft license and my head office is Delhi. Delhi has made the payment for the Microsoft license. Now, these licenses are used by the employees of the organization, who some of them are in Bangalore, some of them are in Delhi. Should the Delhi office take an input tax credit fully, or should it do a cross charge, or should it do an input service distribution? Now, all this while, most of the time, no one has bothered anything of it. Thanks to the circular has clarified whatever you have done, not done in the past, that's fine. We are like kind of pardoning you, ignoring whatever you have done or not done. But going forward, this is one area you have to do. We are still in the month of February 24. You can analyze all the incomes and expenditures owing to common credits and the income. Could be a situation where income is in one branch, expenditure in another branch. Let me give you another example. Let's say the entity which I gave you example, the Delhi office and Bangalore office is into software development. Contract for new software development has been awarded to Delhi office, but the employees sitting in Bangalore have executed that contract. To the end customer, the Delhi office has sent the invoice, they have signed the agreement, they have given the warranty that in case of any failure, we'll take care. Now, if I draw a standalone P&L, my Delhi office has income either low cost or no cost, while Bangalore office has cost and no income. This is an area where you can identify if there is something cross charge to be done. So here, preparing an individual P&Ls would help you to identify if something needs to be done and is not done. You have to look at it. There's one question by administrator. I would request people to rename yourself. It's easy to interact. So what about sale of fixed assets and especially vehicles? Friends, for vehicles, there are two types of classification: vehicles on which ITC availed, vehicles on which ITC not availed. Central Tax Rate Notification 8/2018 has given a methodology to treat that, and vehicles where the input tax is not availed, to discharge the GST only on the surplus that is arising on the sale of the asset. So if you are making a profit on sale of such asset, only then you will be paying GST on it. Now, if you are not availing ITC, only then this notification would be applicable. If you are availing ITC, then this notification is not applicable. You have to treat as if the value of the goods is sold. So you have to look at 18.6 and the sale value. Moving further, the first and foremost thing that you have to do for the financial year 23-24 is reconciliation of the turnover. Reconciliation of turnover, month on month, we are filing my GSTR1. Thanks to e-invoice on a real-time basis, the data is traveling from my invoice register to GSTR1. And the GSTR1 data is auto-populated in my GSTR3B. And my returns are getting filed. But the question to all of you is this all and is this complete? For example, in the month of February, which just passed by, you have filed the January returns. While you are filing the January returns, have you ever looked at my April sales and my April R1 is the same? I'm sure most of you wouldn't have paid attention to. Why would you look at now April 24, April 23? But the answer is you have to. And here where GSTZen comes into handy. In Zen, you can upload your sales register, you can download your GSTR1, you can reconcile the differences if any. If there are any invoice that is deleted, you can say that, hey, look, that invoice was raised, it got deleted either by error, credit note, whatever. Take an effective action in the portal also, delete that invoice in the portal. Or someone has entered a sales invoice in my sales register books of accounts after I filed R1 and I did not notice. Can I include that now? Yes, you can do it. My invoice is same, there's no change. Invoice value, invoice number, everything is same. Just that the party name got changed. Party name earlier was Venu. Instead of Venu, now the party name has become Utkarsh. So let's say the accountant Bharati is using the Zen, she will easily be able to connect these dots and say, I need to nullify the original reporting which I have done in the name of Venu, and I have to add the new GSTN which is in the name of Utkarsh, right? These are easily correctable, and this is where you have to use the technology. And we are going to see after the theory session how these corrections can be done while I am filing R1. How do I correct that? Not just the correction of the GST number and amounts, you can correct the IGST, CGST, any of the changes that have happened, you can correct it. While you are correcting, the whole of the objective is the turnover in the books of accounts is X, the turnover in the GST return cannot be Y. Even here, the turnover in my books of accounts should, in my GST returns, should also be an X and it cannot be Y. This is something that will help you while finalizing your returns and books using Zen. Secondly, not just that, you also need to have another type of reconciliations. So in GSTZen, you have something called consolidated report and R1 analysis. While you file your returns, you need to have a glimpse. Majority of us have single rate commodities, but some of you have multiple rate commodities. So I should also be able to see a simple graph, how much of the goods are selling at 5%, and I should also be able to parallelly see how much of the goods I am selling in 12% and how many of the goods I am selling at 28% or 18%. So if I know that there are 18% goods and 5% goods, so you can quickly cross compare and with the books of account and see that, hey, my total turnover is matching, but my somewhere my percentage of the credit goods that I have sold as per the books or as per the business, it is not matching. Reason being, the errors are human. It's like anything which you are doing manually, galtiyan ho jati hai. You, when you see as a businessman looking at the data, I'll be able to correct it. That you will be able to help only when you see the consolidated data, rate wise, month wise. This is also which you can download from the GSTZen. All the values will be coming. You can just apply a simple pivot table. You will get a view of this information. Then sum of the turnover, that is taxable versus exempt. Some of the thing you have not paid the tax, considering it is zero rated supply or exempt or nil rated or non-GST. A classification of this, especially you have in your P&L account something called other income. Now this other income could be some incentives, credit notes that you have received from your distributor. You have to pay taxes on this also, unless otherwise you prove that this is not a supply. A reconciliation of this is also very much important. Reconciliation between B2B and B2C. Very soon, government is definitely going to come where various rules. We have section 38 restricting the quantum of input tax credit one is allowed to avail. Rule section 38 slowly is getting implemented. We saw rule 37A, where if someone has not filed 3B, you don't take the credit. So now with the 38 being full force, government will come and say that if you are a supplier, I will restrict you to the quantum of B2B because you are passing on the input tax credit basis some parameters. You are a newly registered taxpayer. I will not allow you to report B2B unless you have a balance in your cash ledger or credit ledger, right? So you are in a risky trading commodities, say gutka or anything, unless you pre-deposit, like in a the casual taxable person, when we take a registration, we compute our tax liability and we pre-deposit the tax and make the payment. Something like that is going to come up, so very important. Another important is reconciliation one has to do, and Zen will help people in doing reconciliation, is pan wise reconciliation. Sometimes you have the turnover matching with the books and the portal, but at a PAN level, not a GSTN level. Erroneously, someone has reported turnover of one books to another books, commonly minted. It could be any of that. All these reconciliations possible using Zen. And this is what you have to do with the outward reconciliation. So books versus R1 versus 3B is something that you have to do. Zen will help you in doing it. So April to Jan, please redo your outward supplies once again. You only have February and March to correct. You may say, why not till November? Answer is there till November, but who will remember the crossover changeover effects? So the changeover effects are important. So better do it now. And very important, you need to know the amendment is allowed only once, whether it is B2B or B2C, amendment is allowed only once. You got to do it very methodologically and diligently. Here, when you use a software, it will help you do it. Credit notes. You clean up your debtors, you will realize that some of the debtors are long pending, not paying. And when you follow up with them, they would say that, hey, look, these goods have returned long back. Or I have said that I don't need the goods. Supply itself did not happen. Or the supply was of a lower quality. I have asked for grade A products, I got grade B products, and this money I'm not going to pay you. So look at the provisions of Section 34. Other than bad debts, if you think that there is a deficiency in the supply, you can issue a credit note. And by 31st October, you should issue a credit note. I would again recommend that do not carry forward a thing of the financial year 23-24 to 24-25. You better do it anything in the same year itself. Let's see if someone have any questions. Yeah, Nazim is asking to repeat on the vehicle related point. Nazim, on vehicle, it is very simple. If you have availed ITC, then you have to pay GST on the sale value of the asset. If you have not availed ITC, then you will have to pay GST on the differential amount is what you have to make the payment. Some other aspects of the outward supply, moving next to export compliances. When it comes to the export related compliances, first and foremost, please have an LUT done. See, I see most of the people do not do the LUT. You can now do the LUT for 23-24 and upcoming here also. Once March 24 completes, you cannot do LUT for 23-24. To prove, you might have a single sales, still having LUT is mandatory. So get this, keep this as a priority. Plus just check and whether LUT has been obtained and do the LUT. Number one. Number two, whenever you are doing a merchant exports, so you are making a supply to someone who is consolidating and making a further supplies, and you are availing the benefits of merchant exports. Please ensure the notification 40/2017 has given certain conditions. All those conditions have to be met before you make sure that the benefits are availed. And in case of services, export of services, the time limit to get the repatriation of the money is within 1 year. The payment has to be received within 15 days from the expiry of 1 year. If it doesn't, the department would say that this is not export. So better do the compliances of the export in terms of realization. And those who are claiming a refund of it, having the export BIRC, the inward remittance from the bank, is very important. If you are making a supply to SEZ, this was not there earlier, but now this has become after the amendment in the last year where authorized operations have come in. So first people are asking, is it for authorized operations? So services, there are some 66 entries of authorized operation, whether it is fitting into that or not. And in terms of goods, if the goods have gone to the SEZ, the endorsement by the SEZ officer, so on the invoice, on the back of the invoice, they will give an endorsement saying that the goods have entered into SEZ premises. Only then you can treat them as export and the export related benefit can be claimed. There's a question from Karan. Our client pays an additional amount apart from the regularly monthly billing as a bonus for our employees. We are service-based IT company. Is GST to be paid on such bonus? Answer is yes. Karan, so these are the incidental and additional thing because the money has given to you and you have further passed on to the employees. So it's equivalent to value of supply. 15 subsection 2 of the GST Act envisages this also as supply. Question from Rajesh Agarwal, is BRC compulsory for export of the goods? Rajeshji, we have the new entry in the refund rules. 96B has come in, wherein they said even if you are doing export of goods with payment of taxes, at the time of filing shipping bill itself is a refund, you have received the money. But if you are not realizing the sale proceeds in foreign exchange, you have to refund back the money, the GST that you have taken. So be careful of that. Inputs, pretty simple. Everyone knows by now majority of it, but I'll tell you the challenges in the inputs, what we are not complying, non-complying. First and foremost thing, the input tax credit has to be apportioned between the supplies which attract GST, supplies which don't attract GST. When we say supplies which attract GST, we are talking about taxable supplies and zero rated supplies. So any ITC relating to this, you can avail. So if an ITC is pertaining to non-taxable or exempt or nil rated, you cannot avail an ITC pertaining to this. You can only avail ITC pertaining to taxable or this. But if you have a common input tax credit pertaining to both, let's say you have a statutory audit bill pertaining to taxable outward supplies and non-taxable, then you got to apply the concept called Rule 42. The input tax credit has to be apportioned in the turnover of taxable and exempt, and you have to allocate. This is one area many people are not doing it. Even though you have some exempt supplies, common input tax credit has to be identified and to be done. This is one I would request everyone to take care of the complaints. Then we have effective from 1st Jan 22 in section 16(2), subsection AB, AA, AB, other insertions that have happened, wherein it was mandatory that GSTR1 was to be filed, only then you have to take. Later they said, not just GSTR1, the credit should be visible in GSTR2B. That means supplier should be filing their return by 11th. If they are not filing the return by 11th, then you have to pay the taxes from your pocket, avail the credit in the next month. So you have to, another condition to check whether it is there in 2B or not. And if it is there in 2B, pertains to you, avail the credit by reporting to 4FI. Doesn't pertain to you, avail the credit and reverse it in 4B1 called permanent reversal. If it pertains to you, but you have not fulfilled certain conditions and you want to avail it later, then reverse such credit in 4B2. Anything reversed in 4B2 should eventually be reversed back or availed, whatever be the methodology. So when you are availing it back, you have to report it in 4D1, again in 4A5. These are the things that you have to do. And department is educating that if you think that it is a permanent reversal, you have currently done in temporary reversal, they want you to re-avail by reporting into 4D1 4A5, and then report to 4B1. So any report reversals that happen in 4B1 are permanent in nature. So the credit mechanism of offsetting the credit ledgers and transferring those balances from the common consolidated fund of India to the states by GST is done only for 4B1. So this is a new thing the states are insisting. Be careful of it. And not every credit visible in 2B is your credit. Some of the credits would be ineligible credit. Please refer to section 17, subsection 5, and make sure those credits are reversed. If the credits pertaining to other unit are with you, please transfer those credit by way of invoice or stock transfer note. We are not making a payment to vendor within 180 days, rule 37 reverse the ITC. Reavail whenever you are making the payment. If suppliers are not filing, reverse the ITC again to the extent people have not filed. If an asset is sold, unused period, compute and reverse the ITC. Common credit, reverse the ITC to the extent of exempt turnover. If the goods are lost, stolen, please reverse the ITC. In case of a real estate, no credits available, landowner and the developer have to reverse the ITC. Better be careful of the new conditions. Any rate notification with an abated value, ITC reversal has to happen. This is one area people would make a mistake. And let me complete this, and then I would be handing over to Bharti, and I want everyone you to pay attention. The reverse charge is kind of a revenue neutral transaction. You pay the taxes on one hand, so you'll report it under your 3(1)(d), and you will avail the credit under your 4AC. So for either 2 or 3, 4A2 or 4A3. Inward supplies for the services in 4A2 and other domestic in 4A3. Both net is going to be taken care. But why is it important is, if you pay now, you will be getting credit of it. But if you don't pay, later when you're paying, you'll only be paying, but no credit of it. So let's look at what are all the reverse charge liabilities and what is that you should be taking care of it. So when I say reverse charge liability, it is firstly credits, I won't say credit, expenditure where is not there. So it's the expenditure where the GST is not there. So please comb all your expenditure ledger. In fact, in GSTZen, you have a facility. If predominantly most of the people use Tally as an accounting software. So on a click of a button, the software has an ability to read all the vouchers where GST is there, whether it could be in payment mode, journal mode, whatever, and it can sync and give you a report. You can compare with the trial balance and see, hey, look, so many vouchers are with GST, so many vouchers are without GST. You have to focus the vouchers without GST. You have to see why the GST is not there. Do I need to pay it under reverse charge is most important. Second, if GST is not there, is the RCM for goods or services has to be looked into. There is a list. I'll just share you in a while. Whether you are eligible or not, you have to pay the RCM. After paying the RCM, again you have to apply 17(1), 17(2), 17(5), and Rule 42. For all these reverse charge, you have to prepare a self-tax invoice. That means you are paying, let's say 10,000 RCM you are paying. You have to describe why you are paying 10,000. Which is the vendor, what is the nature of supply, what is the taxable amount, what is the tax. Because you are assessing and making a payment to the government, so there should be a self-tax invoice for the RCM. These are the services for RCM. I have brought up this slide in the earlier sessions also. A reason for bringing it up is for the accountants to broadly look at, because accountant knows your expenditure. I'll tell you where people generally miss out. The people miss out is today Earlier, RCA means people only think GTA and advocate, but now the GTA has become more of forward charge, reverse charge. So there are confusions that are coming. So what are the confusions that are coming? Is firstly, GTA is in forward charge, GTA is also in reverse charge. So some bills have GST, some bills don't have GST. If there is a bill of GST and it is mentioned as forward charge, you are paying to GTA, you don't need to do RCM. But if you are not having a GST amount in it, or it is mentioned as a reverse charge, you have to pay it. In fact, you should be more careful the exemptions, if any, someone were availing. Earlier, there was an exemption of 750 rupees and 1500 rupees per consignment or per vehicle. That exemption is not there. So every bill of GTA you have to pay. Legal services, anything paid to an advocate is applicable. Sponsorships are very common. People report the sponsorship as business promotion or advertisement. But actually, there's a Ganesha festival happening, you're sponsoring food for them. There is a children's school education fest is happening, so you are sponsoring for the venue and you are facilitating them to host something which are happening. So you would have written as business promotion. RCM is applicable for this. Later, please pay attention. Anything that you are paying to the government, please look at it very carefully, and most likely RCM is applicable. This is an area which is very litigative, looking at what is that service provided by central government, state government, or local authority. There was an exemption entry. If they are functioning by virtue of the parliament, the local authority, to the 243 W and G, where they're statutorily they are supposed to do it, only those services are exempt. Leaving anything that you pay to the government are definitely taxable. Please pay RCM. Please look at it. This is one area that you'll be missing. Next is the director services. If any of the director who is non-executive, because executive directors you will be paying salary, non-executive directors, whether independent or non-independent, non-executive directors, you have to ensure on a reverse charge basis you pay it. Security services and motor vehicle was old entry. A year back, residential dwelling which has given, so guest house for employees, these have been included. Please look at that. RCM for goods, very common, very less or not many people require it, but just I brought it. So once you comb it, you did a reconciliation of it, I would request you to prepare a closing entries. What do I mean by closing entries? Reconcile the monthly values in those ledgers. Like when you're booking a purchase bill or the sales bills, the common entry for sales is I debit the customer, credit my income, credit GST liability. So while I'm filing my GSTR1 and GSTR3B, if I debit my output liability ledger and credit to liability register, then I'm in a way I'm bringing some kind of forensic accounting in my treatment. What is this? After posting this, these values should become zero. If it is not, you can check, is there anything that the accountant has missed? These values will match with my part 1 of electronic liability register. So this also acts like an external confirmation which is required for the auditor. Like your output, transfer your ITC also. Debit your the electronic credit ledger and credit your input CGST, SGST ledgers. Do that. Offset these ledgers basis your 3B. When you file your 3B, debit your liability ledgers and debit your electronic credit ledgers. This way you will know that if there is any liability not paid or balance in credit ledger matching with the portal. These are the accounting entries which is more for the control. Everyone should post an entries of this kind. Lastly, the entries which you are doing should have and reasons for itself. If there is any balance in any of the ledgers, you need to have a reason why there is a balance in the ledgers. Could be if you are reclaiming it, reversing it, parked in 4B2 can be a separate entry. Parked in 4B1 will be debiting to P&L because it's a permanent reversal. If you are reversing on account of rule 37, 37A, it is again re-reversal temporary. A credit appearing in your books, not in portal, then it is not there in 2B, then you will have to be looking at why my original ledger is lying. So which is the vendor that I need to follow? Could be reverse. It is there in credit ledger, but not there in the books of accounts. So all these things. So matching of the books and 2A, 2B is more important. Again, GSTZen will help you how easily, simply you can reconcile purchase register and the portal data. Bharti will walk us through how do I reconcile books and the portal. Now, I always tell people that use technology. Why use technology? What is the help of using technology? What is the way forward? Is firstly, we have e-invoice coming up. Every person whose turnover exceeding 5 crores have to do it. And let's say in Jan Feb you have exceeded, please do it. So it's like something gearing up. So have that LUT I have already discussed. If for 23, 24 you have a couple of days, do it. We had Annexure 5, which was reported, which was supposed to be given by a GTA. Now that is not required, but someone is changing from FCM to RCM, you have to declare this. If you want to do a quarterly scheme, you have to do beginning of the quarter. ITC 04 is something which is least compliant, request people to pay special attention. Other authentication is something coming up heavily. Anyone who has done the GST registration, when you log in, you will have a pop-up coming up, the other authentication to be done. If it is not done, please do it, number one. Number two, biometric registration is coming. If you are opening up a new place of business in different states, it is expected a director go and do a biometric. They have to travel all the way. But if they have done the other authentication, the government may not insist on other authentication, biometric for the additional registration. So better be careful on it, right? Any amendments, if you have to do in the books, you have to do by 30th November. Again, GSTZen will help you. What are the original data and the corrections that are there in the books. So with this, the theory part of it, we have come to an end. Let me just see if there are any questions which are not answered. Let me look at it. RVKP is asking, in case of municipality, corporation tax should be treated as an RCM. So property tax which you are paying for your building, in my view, it is not a service that is being provided, so you don't need to do it. However, pollution control fee which you are paying to the government, is it applicable? Yes, the GST is applicable to the pollution control thing. Question from Rajesh Ji. In month 10, RCM bills paid for 5 suppliers. How many self-invoices to be prepared? 1 or 5? 1 consolidated self-invoice for all the liabilities that you need to pay in a month. Is RCM applicable on foreign payment to foreign bank charges? So, Section 13, subsection 8 of the IGST Act deals with it on the place of supply. Finance charges, the place of supply is where the supplier is. While in India, where equivalent of Section 12 says the place of supply is the recipient. So the processing charges of the loan, anything paid to a foreign bank, in my opinion, would be outside the RCM. Question from Rohit. Business promotion, vendor supplying greeting cards, billboard, etc. These are the supplies not registered under GST. Do they come under RCM? No, Rohit, I have shown you all those services that you are availing. Only that comes under RCM. Just because you are procuring from an unregistered dealer, not everything comes under RCM. LUT certificate, is it compulsory for everyone? No, sir. LUT is compulsory if you are making any supply to an SEZ or you are doing an exports. Professional tax is applicable RCM? Answer is no. Professional tax RCM is not applicable. There cannot be tax on tax. All right, we have answered all the questions. So, by the way, this we have our GST WhatsApp channel. Request people to subscribe to our thing. Any of Utkarsh would be sharing so that we'll update you about the time to time on the GST updates. We have 15 minutes. I'll quickly hand over the session to Bharti, who will actually walk us through all the practical part of whatever we have discussed so far. The practice part of it, how do we practically do this? is going to be explained by Bharati, especially on taking the data, filing GSTR1, comparing with the values in the portal, what action I have to take, how to reconcile purchase and 2A, 2B, what action we have to take, all that would be handled by Bharti. Bharti, over to you.
Thank you, sir. Thank you for your very informative session. So I'll be moving on to the practical parts of what Venu sir has explained. So I hope my screen is visible to all of you.
Yes, Bharti, it is visible.
Yeah, so this is what GSTZen software, a person's dashboard looks like. So when you sign up and you add all the GST numbers here, this will be your dashboard. It will list all the GST numbers. It will show the status of your recent returns, that is your R1, 3B, and your 9. Here we have options of your autopilot, manage multiple GST numbers, and notice management. So I'll be showing that as well. So many of you would have a problem of repeating the same task for multiple GST numbers. For that, we have provided this option autopilot. So if you want to download the data for multiple GST numbers at a time or file return, check summary. So what you can do is you can select all the GST numbers from here and perform those functions. So if I want to download some data that is to be on 14th of the month for all the GST numbers, I can select them all and give the command to start download. So as soon as I enter the OTP, it will start downloading my data. I won't need to go into each individual GST number and do the same process again and again. Similarly, if you're filing your GSTR1 and before uploading the return to the portal, you want to check the summary for your GSTR1, you can do the same from here. It will allow you to have all the information in one window. So as in, if I want to check the summary, that is your GSTR1, if I'm filing January, all of it will be available on a single page. Okay. So now moving back, let me show you other features that are available for each GST number. So first thing first, let's talk about reconciliation. So as Venu sir has mentioned, you need to reconcile your purchase data with your 2B, so that to make sure that you are claiming the correct ITC, as well as you should reconcile your GSTR1 with the invoices that are present in your books, so that there is no discrepancy between your books and your GSTR1 as well as your GSTR1 and 3B, which helps you in GST compliance so that you don't get notices. Government is issuing a lot of notices now. That also is manageable by using GSTZen, but it's altogether better not to get those notices. So to avoid getting notices, you should reconcile your data. I'll show you a sample of how that is done. So all the reconciliation have similar process. So you select the one you want to do and select the year, log in with either OTP or username password. After logging in, you just need to select the data. You can select the data for the whole year at once and give the command to download. Since the data is already downloaded, I need not download it again. Next step would be to upload the purchase register. You can do it through Excel or direct Tally integration. Both options are available. I have some dummy data prepared here, which what I can upload. So all the data prepared here, you'll have to do a one-time mapping. If you upload the same format again to GSTZen, it will preload the settings that you already had and you can proceed. It uploads the data within a few seconds. If there are any errors, it will show up on the screen like this below. You can go back and correct the data, or you can confirm and save entries which are correct. You can correct the data and re-upload the same. Okay, so now two steps are done. The next step is to run the matcher. So this will allow the software to match the purchase invoices that have been uploaded through Excel with the data downloaded from the portal. So it will ask you for two parameters, maximum days difference and maximum tax amount difference. This can be given as per the user's preference. And then and after that, you'll be able to download the reports. You can download monthly report or you can download yearly consolidated report. That is your up-to-date report. Let me show you the sample here. This is what the report looks like. You have the overview sheet. Then we have also provided the summary of the return. You can see the monthly data segregated into various tables. That is your table 4, A5, 4A4, 4A3. So this will also help you in filing your 3B. Then you have the actual reconciliation sheet. It will give you three types of results: only present in books, only present in portal, and then the invoices that are matched. Even when the invoices are matched, there might be some discrepancy. This will show you at the end. And we also have this suggested ITZ position. So even though the invoice is matching, there might be some small difference like your tax difference or the invoice number might not be exactly the same. So there it will say you check whether you want to avail, and if all the parameters are matching, it will suggest that you avail the ITC. So based on these results, you can provide your workings in the sheet itself, and GSTZen provides an option to update it to the software. So whatever details you provide here will be updated and saved to the software, so you can come back and see them at a later point of time. So if you are claiming your ITC in April, so you have done all the working, saved it, and then at the end of the year, you're coming back to do the reconciliation for the whole year and see your data as a whole. You will still find those detailed workings here, and it will help you in your yearly compliance. Okay. So now after you have done your reconciliation, if you are looking at one report to get all the data for the whole year, you can go to your consolidated report, that is GSTR1 versus 2A versus 3B. Let me show you a sample of that report as well. So here it will give you comparisons at a summary level. So in reconciliation report, you would get a comparison at invoice level. This report will give you comparison at summary level. You can either take it with 2A or with 2B. This will take another a few seconds to download. Okay, so here you can see the total data of your GSTR1. In your GSTR1 consolidated, the data is divided into various tables, and you will see the data across all the months. So you'll know what has been filed in your GSTR1 for your B2B invoices or your exports or your B2C. Similarly, you will have GSTR3B figures segregated into various tables. You have GSTR1 summary, that is the total for the whole year, and again GSTR3B summary, total for the whole year as on date. You have comparison of 2B figures with 3B. So you can see if there is some difference between what ITC was available in your 2B and what you have claimed in your 3B. So at the end, you will find the total difference that is there for the whole year, and you can see what steps you need to take either to correct that difference or explain the difference so that you don't get any notices. Again, if you have uploaded your books also, it will compare the books with your 3B. Similarly, you have comparison of GSTR1 with 3B. So your liability reported in GSTR1 should match your 3B. Otherwise, again, you will get notices from the GST department. So this will also give you where that difference is coming. Again, you can find at individual invoice level the difference when you go for books versus GSTR1 reconciliation. This will give you the difference or comparison as at a summary level. Plus, you have the sales overview where it will provide all three books versus GSTR1, and you have books versus GSTR3B, and at the end GSTR1 versus 3B. So in a single sheet, you will get the data across all platforms, that is your books, GSTR1 and 3B. Similarly, you have purchase overview. Then you have your GSTR1 by customer. Here, summary level information for each customer is given rate wise for each month. So here you'd also be able to segregate the data rate wise per customer per month. Similarly, you have GSTR2B by vendor. Again, it will segregate the data per vendor per month rate wise, so that you would be able to get an overall picture for each vendor. As Venu sir had mentioned, there might be some error due to incorrect rate given. So here you would be able to check the rates as well. And you have your HSN summary, which will give you the total sales and help you in filing your GSTR 9 also. At the end, you have your GSTR 2A TDS. Okay. So this was the consolidated report. Let me move on to other features. Okay. So we have other reports also. I have showed you consolidated report. So individual level report you have for GSTR 1, 2A, 2B, 3B, ITC 04. You can also get the electronic ledger report as well as your e-way bill report. Now moving on to filing of returns, you have GSTR 1, 3B, 9 and 9C. So filing of R1 when you have e-invoices is it is very important that you don't replace your uh, e-invoice data that is auto-populated. So we have provided an option where you can download the auto-populated data and you upload all your sales register to GSTZen. What GSTZen will do is that it will run an automatic reconciliation between the two, and it will calculate the delta for you. So most of the people, what they are doing right now is they will download the auto-populated data from the GST portal, get their books, do a manual reconciliation, and then extract the data which has to be uploaded. That is the delta. They will calculate it manually, and it takes up a lot of time. So here you just need to download the auto-populated data directly from the portal, upload your total sales register, and let the software work for you. Here, based on your reconciliation, you would have different results. So there would be invoices which are present only in books. That would be mainly your B2C. So here you would mark them as to be uploaded to the portal. Some invoices would be present only in the portal. So you have to see whether you have by mistake deleted that entry from the books, or it was supposed to be cancelled, but the deadline, that is the 24 hours, had passed. So you were not able to cancel it and you just cancelled it from your books. And now you want to delete it from the portal. So you can mark that invoice for deletion. Sometimes you are not able to remove single invoices from the portal when you have more than 500 entries in a particular section. So here the software will allow you to delete those particular single entries without deleting the whole section. Again, if moving on to the next, books and e-invoice, if it is an exact match, you would want to keep the portal invoice as it is, because you do not want to disturb the IRN and change the source. And if there is some difference between the books invoice and portal invoice, you can choose to replace that with the books data, or upload or keep the portal invoice as it is. So based on these settings, GSTZen will calculate your JSON to be uploaded. That is, your payload XLS will give you the delta. This summary will show the overall summary that will be present for your R1 after you do an upload. So what you do is you can check the delta. It will show you what will be uploaded and what data will be deleted. So after upload, you generate the summary that is there in the portal. What you do is you check the data that is present in Zen and check the data against that is present in the portal and do a comparison. If the comparison is showing 0, you can go ahead and file your R1. If there is a difference, you need to go back and check where your discrepancy is coming and then file your return. So all this process is available in autopilot. So you can do this in bulk. You won't need to go individually to each GST number and do it. The last thing I want to show you is notice management. Here, again, for all GST numbers, you would be able to download it from autopilot. You can select all the GST numbers and download in bulk. Here you can filter by various by your GST number if you want to choose, issued by, and your date of issues. So you have multiple filters, and you have the status as well. You can download the PDF copy of the notice from here. You can go into the particular notice or demand, and you can change the status. Right now it says unread, and once it is resolved, or you have it is work in progress, or you have submitted a reply, so based on this you can change the status and keep a record of what you have replied to the portal by adding your attachment. You'll be able to keep a track of all your notices for all the GST numbers in a single place, instead of logging to each GST numbers, GST account in the GST portal. You would be able to maintain everything from GSTZen itself. Okay. So that is it for the practical parts of it. If anybody has a question, please let us know, or you can contact us on our number and through email as well.
Thank you, Bharti, and very informative and very practical to the dot. So, friends, again, coming back to the same point, it's very important that you use technology and simplify the steps. And as you are using it, you can always come back and ask what else additional support is required. Our customer support always is best helping the people. We are leaving our coordinates here. You can always email to us, support@gstzen.in, or WhatsApp on this number. Our team will be able to assist you. All the questions that had come in the chat, I have answered the question. In case if some question is not answered, you can unmute yourself and ask the question. We have some more couple of minutes before we wind up the session.
Yeah, good evening, sir. Sir, you mentioned that for pollution control board, for all type of services renewals, we need to make the RC payment.
Correct, sir.
But is it applicable in all the states, sir? Because in Tamil Nadu, as of now, we are not doing any such thing. For pollution control board, we are undergoing the water analysis charges, and as far as the renewals, whatever the pollution control renewals is being done throughout the year. No, it is for the year. It comes from Jan to December. So in this kind, we are only paying the amount what it is being shown in the demand. So the demand notice will be issued by the pollution control board. Basis on that, we'll pay the DD or we'll pay through the online mode. Whether for this also we need to show it under RCM, because
Yes,
they are not going to show their RCM, their this thing in the R2B. And on what way we need to pay this, sir?
Yeah, so this is kind of a self-tax invoice. Section 31, subsection 3, clause F demands you to prepare a self-tax invoice whenever you are procuring goods and services from an unregistered dealer or taxpayer. So here the government entity is someone who is not required to be registered, and you are procuring some services from them. You are expected to pay under reverse charge by raising a self-tax invoice, sir.
Oh, okay. Okay, sir. Noted, sir.
Yeah.
Yeah, Benu sir, may I?
Yes, sir. Yes, Rajesh, sir.
Yeah, Benu sir, this ITC reversal shown in 4B2, you have answered this my question. But some school of thoughts is there is that 180 days reversal, non-payment to supplier, that 180 days criteria, that only can be re-availed, and whether this temporary reversal of ITC can also be re-availed.
Yes, sir. Once you are reversing under 4B2, there is no time limit to re-avail that, sir.
Okay.
Am I saying with authority? Is there in a stamp kuch notification rule circular? Kuch nahi hai. It's just we have one circular which is saying that reverse karo, re-avail karo, bas. So.
करेक्ट थैंक यू सर। सर वो जो 3 स्लाइड्स है आपका, प्लीज एक बार दोबारा दिखा देंगे, जो बुक का मैचिंग वाली था ना, लास्ट 3 स्लाइड्स जो अपन लाइबिलिटी को
I got that. Okay, so that is again the interest I would expect earlier. In the initial days, I would say that okay, acha, both log pata nahi tha, that's fine. But today there's a lot of maturity with the accountant, and we should insist the accountant to post these entries. What are the entries? Is debit your output CGST, SGST, IGST ledgers and credit to a new ledger called electronic liability ledger, electronic liability CGST, SGST. So when you post this, what will happen? Your output ledgers should become 0. Agar wo debit mein hai, that means you are reporting entries into your liability ledgers beyond. In GSTR1 and 3B, you are reporting a liability beyond what is there in the books. ये पोस्ट करने के बाद भी वो लेजर्स में कुछ क्रेडिट बचा है, so you have short disclosed some liability in your R1 and 3B. So these are kind of a forensic accounting where you are bringing in controls in your accounting itself. Likewise, in the input tax, create an electronic ITC ledgers, electronic ITC, CGST, SGST, IGST ledger, and credit your input CGST, SGST ledger. This is basis your 2B. This will help you if some suppliers have not reported in 2B. So it is still lying in my input CGST ledger. It is not traveling to your electronic credit ledgers. So this way you can also, from the books, you can see who are the vendors who are not complying. And this would help you to match with whatever the credits that you are taken in 2B. Because the external confirmation of balances is required for the stat auditor for all the items, and especially GST transactions. You have huge value. 18% of the purchase and sales is routed through that. So these ledgers are also kind of auto confirm. And after payment is debited to cash ledger, after 3B, you debit the liability ledger and credit the electronic credit ledgers. So this will typically depict whatever is the balance in the electronic ledgers maintained by the government portal. You will also be parallelly having in the books of accounts, and this is a simple but very superb accounting control. You should insist the accountant do this for you.
Thank you, sir.
Yeah. All right. So we have come to end of the session. Again, special thanks to Utkarsh and Bharti for consistently taking up the sessions and updating, and more thanks to the participants. Your interest gives the motivation for us to think up and come up the topics, so that we want all our GSTZen users to be more tax compliant and more proactive. Even before a notice comes, you should be aware that kya galat hua, do I have an ability to fix if a notice comes. That is where we are always looking at. And feel free to communicate back to you with come back to us on the support ID which the Utkarsh has shared. Don't worry about this session and PPT and recording. It is recorded, so you will be getting a link above our recording and also the attachment over to you on the registered email. Yeah.